Hi, my name is Gregg. I'm here today with Peter Clausi, VP of Capital Markets of Silver Bullet Mines, Inc. Hello, Peter.
Hey Brian, how are you doing today?
I'm doing great, thanks. I just wanted to jump right in. I have a question for you that I think is quite interesting to me as an investor. There are hundreds, if not thousands, of junior mining companies out there begging for attention. What is it that makes Silver Bullet special?
Can you name me another junior that's going to be in production next quarter?
Unfortunately, not.
We're going to be in pilot production next quarter, and that sets us apart from every junior out there.
Absolutely, yeah. You would think it would be more common, but as I've learned as an investor, there are a lot of companies that are doing other things other than production.
The reason we can be in production next quarter is we're like that rock and roll band that's an overnight success 10 years in the making. Some members of our management team have been involved with this project since 2012. Over $10 million has been invested here since then, building infrastructure, testing, sampling, doing all the things that you have to do to create a successful enterprise. The last step was going public to raise money, gain liquidity, which means next quarter, when our parts arrive and we can install the rest of the mill, we will be in pilot production. That is unique.
Briefly, if I may, one thing we haven't touched on that I was really excited about in terms of our initial question about what sets you apart. I have been following your story, and what I understand is quite unique is you have your own assay lab. And I just think that's so cool. What I really love about it is it cuts through the delays, perhaps, that your competition is seeing. And you know, as you well know, when other entities are out there, they do their drill results or their sampling, and months can go by before you know what the results are. So I'd be interested to hear your perspective on how you arrived at that.
The early drafts of NI 43-101, which every mining investor should read at least twice a year, did not provide for in-house labs. The final draft did, and the logic of it makes sense. Speed. And let's say you and I were running a project in North Russia, 2,000 miles from anywhere. Just the cost of getting core out and getting results out and bags of samples would be prohibitive. So under 43-101, you are allowed to run samples at your own lab. My personal perspective is that best practices always demand you explain why you're using your own lab instead of sending it out. And it's also my belief that at least a couple of times a year, you should send some samples for checking out to an independent lab just to make sure that you're following best QA, QC and that the numbers line up. That's best practices. We're going to do best practices. I'm a lawyer, shareholder rights activist, governance, fairly skilled at governance, been on a lot of boards. We've got Birks Bovaird, who's the chair at Energy Fuels, as the chair of our company. I figure if he's good enough for a $1.8 billion market cap company, he's good enough for us. We have Brian Crawford, who's our CFO, who also assists with compliance and governance. But yeah, we're going to run numbers at our own lab. Do you know what an incredible advantage that is for us? The speed, the accuracy. We won't be running low-grade ore. We'll just dump that over there and run it maybe 5 years from now.
That's brilliant. I think it's just a great operational practice. And as you stated, if you add on top of that as a layer of quality control, having an independent lab verify from a couple times a year the results for your investors, wonderful. It removes any questions about the quality control. But in terms of, as you say, just day-to-day mining and production, having that ability to know what to target and what you're working with, what an advantage.
Should talk about the technical team briefly. Our CEO is John Carter from Oakville, Ontario. John's skill set, he's a people person, and he has built over 100 processing facilities around the world. Right? This is a mining story. This isn't exploration. This isn't development. This is, we know where it is. We're going to go get it and put it through that machine and get silver out the other end. And John knows how to do that better than almost anyone in the world. Should point out it's an environmentally friendly operation. We're very aware of our ESG obligations. There is no leaching going on in this mill. It's all gravity. And it's so easy, Johnny, you and I could go down and run it together. It's a very, very simple mill. No chemistry needed. Just crush it and grind it. No, you can't do this with gold, and you can't do it with your big bulks like nickel and copper. You'd have to have, what, I don't know, 3% copper for this to work, which would be stupid high grade. Silver is a unique beast. Less than 10% of silver, it comes from primary silver mines. We are a primary silver producer. All of our mines will be primary silver producers. 2 or 3 of them might have gold credits, but I generally count the credits as nothing. When I read a press release that talks about we have this much silver and this much gold and this much tin and this much aluminum, you're never going to get 100% recovery from all of those. So I tend to discount them, especially in a PEA. Look at the primary. Are you going to make money off the primary? If you're not going to make money off the primary metal, get out of there. We're going to make money off our primary, which is silver. There is no PEA. There is no resource estimate. There never will be. We're chasing a vein. To do a resource estimate on a vein, you'd have to drill every 25 meters to show that the vein was contiguous 2 kilometers out. All right, that's a prohibitive cost. But then you'd have to drill in between the 25 meters to make sure the vein was contiguous 2 kilometers out. Then how wide is it? I don't know. Then we're going to have to drill more hole. It is impossible to get an accurate, trustworthy resource estimate on a vein-based system. There are instances of companies getting one solely to make Bay Street happy, but if the property is this big, they'd get a resource estimate on this big and never update it. Just get to work and let the financial statements tell the story. And that's what we're going to do. It's the old Pat Sheridan School of Mining. Pat passed away a few years ago, was a mining legend, an investment legend. Miss him. I wish he were back. But his theory was, don't come to me for money when you know where it is in the ground. If you know where the mineralization is, go get it. And John Carter was a friend of Pat's. Our CFO knew Pat. Everybody knew Pat. And we're following that theory. We know where it is. We're going to go get it.
You're just really going to get down to business, get right into production, and start generating cash flow right away. And
Yep.
I think that, surprisingly, once again, not a common business model. I've been invested in all kinds of different junior mining stocks that I won't mention here that seem to do all kinds of analyses and drill programs, but never actually seem to get into production, never seem to actually make any profit. And so this is truly a unique story. And that's why some of my friends and I were really excited to get involved early on.
So last item that I'd like to share with you is, how do you value a company like this?
Mm-hmm.
So we've already announced that the mill, once built, will process 125 tons of ore a day. I like taking conservative numbers. So I take 80% of the brass plate or the nameplate. So 80% of 125 is 100 tons per day. I assume we're going to produce for 300 days of the year. Mills break down, mills need to be serviced. So that allows 5 days a month for servicing, for stuff to happen. Because as we all know in the mining business, stuff happens.
Yeah.
So that's 100 tons times 300 days. The next thing you need to know is, what is the silver price? Right now, silver is what, 22.5?
Yes.
Then you need to know what our operating costs are per ounce. We don't have that estimate for the public. We're not making one public. You can look around at companies in the area. They seem to range between like $11 and $15 an ounce, but we are not taking a position one way or the other. For the sake of this argument, why don't we use $12 an ounce, which is in the middle? So if silver's at 22 and our costs are 12, that means we're making $10 per ounce. The last item you need then is grade. Well, hey, let's make it easy. How about 25 ounces? That's not high.
Okay.
That's not high grade. That's low medium grade of 25 ounces per ton. So then you get your calculator and you multiply 100 times 300 times 10 times 25, and that'll tell you how many dollars that operation will yield over the course of a year. So on our assumed math, gets us to $7.5 million US dollars of free cash flow under those assumptions in year one. You value the company, or you value this part of the company then as a function of cash flow. And the analysts I've spoken to say we should be getting a 6 to 7 times multiple only on the cash flow. So 7.5 million US is what, 9 million Canadian?
Approximately.
Roughly.
Yeah.
Okay. So a 6 times multiple on that gets you to 54 million Canadian. A 7 times multiple gets you to 63 million Canadian. Then you have to add a bump for Idaho. Then you have to add a bump for the other mines that we'll be putting into production. I don't know what that bump is. But under that math, we're a $55 to $60 million company 1 year after production starts. Seeing how at that point, if all the warrants exercise, we'll only have 65 million shares out. You're looking at about $1 a share, but all that is hypothetical based on those assumptions. None of this is 43-101.
Of course, yeah, but it's interesting to hear you run the numbers. I fully understand they're just hypothetical. Nobody knows or can predict the future, but it's really interesting to hear you do that. I think from what I heard there, those assumptions all seemed quite reasonable and perhaps even conservative, and so that's really useful, I think, for all of us to hear.
My metric for success in this company is going to be measured differently. Usually you measure it by share price, or did you achieve your geologic goals, or did you get taken out? But our team is focused on the 50-cent warrants that are outstanding. If we do a good job in all facets of our company, then those warrants will get exercised. So I'm judging this management team by how many of the 50-cent warrants get exercised. They have a 2-year term on them. So we will know, a year to a year and a half out how well we're doing by how many of those warrants are getting exercised.
Absolutely. That's a good way to look at it. And I think really, really appreciate the investor-focused approach to this. And, kudos to you as well for getting out there and doing all of these interviews. I know I'm not the only one. You've been out there every day, getting the story out. For me, my reason for being involved in wanting to do these interviews is actually to test a little bit the leadership teams of a variety of companies to see if they're excited about their own story. I see that with you. You're really excited, genuinely, and really trying to get the message out there in any way possible. I fully recognize that I'm a relative unknown, small-time investor in this business, and you were willing to speak to me today, and I sincerely appreciate that.
I'm genuinely excited about this story. It has a lot of unique parts about it, and it's a win. And don't forget, I'm a bigger shareholder than you are. I have a vested interest in seeing this win. I have options at the same price that everybody invested at. I have a deeply vested interest in seeing this become a massive win for everybody.
I love it. Well, thanks very much for your time today, Peter. In closing, just wanted to ask if there's any additional thoughts or items that you wanted to leave with us and prospective investors.
What's funny, usually when you open a mill, it's a big day, right? Everybody gets champagne, you get a doré bar to celebrate. But in our minds, it's already happened. It's like when you're building a house, you don't celebrate the last nail, right? Because you already know what it's going to look like. We're on to the next step. We're up to Idaho. We're up to the McMorris mine. So what's going to be the really interesting event for us is the first set of financial statements following the beginning of pilot production. Because that will give us some guidance as to those assumptions we talked about earlier, the hypotheticals. Now, that'll only be for 1 quarter, and it'll only be for part of 1 quarter. So you're going to have to do some math to extrapolate those numbers and make adjustments. But that, for me, is the first real guidance that we'll have as to what this company will be. So that I'm excited for.
Wonderful. Yeah, likewise, I'll be along for the ride, and really looking forward to some hopefully bright days ahead into the new year and beyond. Really thankful for your time today, Peter, and I hope that we can speak again in the near future.
Absolutely. You have my email address, you have our Twitter handle, you have my personal Twitter, you've got my cell number. If you want to throw it up on this interview for everybody, you go right ahead. Like I said, every shareholder owns a piece of me, so come claim it anytime.